Welcome back to another dividend investing video. My name is Bruce Wang and I've been doing these videos for a long time now, and I have to say it is getting very repetitive. My last video was pretty successful, a lot of new subscribers, over 300 subscribers just from that one video. So welcome to the channel for all you new subscribers. I do a lot of dividend investing videos. I do some real estate investing videos. I've slowed down on that just because I finished my second rental property and I'm just relaxing right now. It's winter. I'm just freezing my butt off every single day. I'm looking for another rental property, so when that happens, I will update you guys as soon as possible because those videos are a lot more fun to make, but these dividend investing videos are pretty helpful, so I just keep making them for you guys. Just to recap, I'm making around $80 every single month just from dividends from my portfolio. So I've been focusing on this for over the last year, and so far so good, all things considered. And today my portfolio has finally crossed over $11,000. $11,074.52. Let's take a look at my performance for over the year. I'm up almost 17% on the year, $1,600. And this doesn't count the dividends that I've received over the past year. Plus now I've received over $300 something worth of dividends. And all of that just goes back into the portfolio. That is my little friend that's helping me grow this portfolio faster and faster every single month. I'm using the Robinhood app and the M1 Finance app for my investing, and I update you guys with what I'm buying every single week. The first purchase I made this week, I bought 3 shares of SPHD at $43.10, totaling $130 for this purchase. SPHD is a monthly paying dividend stock. This has been helping me with my portfolio, keeping it diversified and growing it over the past year. For my second purchase this week, I bought 1 share of Starbucks at $83.77. Starbucks is something that I've been growing my portfolio with recently. So in the last 3 months, this is down almost 14%. I believe that is oversold, so that's why I've been buying it every single week for the last 2 or 3 weeks now. I have 11 shares, almost $1,000 in equity, and my average cost right now is at $82.71. So that means I'm still up when it comes to total returns. The third stock that I bought this week is Realty Income. I bought 1 share at $78. And one thing about Realty Income is that it is a real estate investment trust, pays monthly dividends. And let's take a look at the last 5 years performance. It is up 71% over the last 5 years. So Realty Income is one of my biggest positions in like my entire portfolio on M1 Finance as well. Realty Income is something that I could buy every single month, but currently I think that it is a little bit on the pricier side, so just be aware of that. For my last purchase of this week, I bought 3 shares of PSEC for $6.48. PSEC is another monthly dividend paying stock, and currently my average cost is a lot higher than the price right now. Average cost is at $6.67, and right now I'm just trying to average my way down. This is something known as dollar cost averaging. A lot of people do it. It is a very common strategy in the investment world. So basically what you do is you just buy it on a regular basis every single week, every single month. Even if the price goes up, you just buy it consistently. When the price goes down, you buy consistently, and your average cost will be in between the highest price and the lowest price, hopefully. I get asked a lot of the same questions every single week, so in the links in the description is where I leave all of the information for all of the frequently asked questions, and you can find everything there. All of the monthly dividend paying stocks, I have a list there that you guys can check out. These are the ones that I personally own myself. So let's switch it up right now and go into the M1 Finance portfolio. It is sitting at $6,500. Total gain so far, $275, and $56 of that is coming from earned dividends on the month. So I've been invested with M1 Finance since March 13, and so far I'm loving it. I believe that one day this total return will be a lot higher than my Robinhood total return, so I will keep you posted when that actually happens. This has to be the easiest portfolio that I own so far because I have everything on auto deposit, and I don't have to do any work other than just check up on it once a day or so. And if you guys want to see my entire portfolio, links are going to be in the description. So in the last week, I didn't make too much dividends, but the dividends are coming in every few days or so. November 15th, I made probably just over $1 or so worth of dividends. November 14th, I got 18 cents from Apple. And before that, it was last week's dividends, which was just over maybe a few dollars here. But so far, so good. All the dividends are just starting to roll in a little bit more each and every single week. In my last video, I asked you guys if you guys want to learn more about taxes. I think this is going to be a very controversial subject, just because how I see taxes might be a little bit different than how you guys see taxes. So let's take a look at the charts, because I think this is going to be the best way for me to illustrate my point here. This is the 2019 federal income tax bracket. All right, I would believe that most of the people watching my videos are going to be in the top 3 brackets here when it comes to the federal income tax brackets. So you're going to be in the 10%, 12%, and 22%. If you guys are in the 24% and higher, you guys will most likely be able to afford an accountant, because I do all of my taxes with an accountant, and it doesn't really cost that much more. It just costs a few $100s every single year. And if you have an accountant on retainer, that might even be better for you if you have like a business or something like that. But I'm digressing right now. And if anybody is in like the 35% tax bracket or the 37% tax bracket, you guys should be giving me tips on how to do taxes. So when it comes to just strictly dividends, I'll be making less than $1,000 in dividends just for 2019. So number one, that means I'm not making that much money from dividends just because my portfolio is so small at the moment. And number two means that I'm not gonna have to pay that much when it comes to dividends. So when it comes to my tax bracket, I'm right here in the highlighted area, 170,000 to 320,000, married, filing jointly. That's me. Most of you guys are gonna be single men out there. I think a lot of you guys are single men, so you guys are gonna be in these tax brackets here. Like I said, I use an accountant. Robinhood and M1 Finance, they're gonna send you a 1099 in February of 2020. And basically, that's gonna tell you how much money you made in dividends, how much money you made in capital gains if you're buying stocks, selling stocks, and all that. And basically what I do is I take that, give it to my accountant, they tell me how much I have to pay. Honestly, if you're making around $1,000 a year from dividends, you'll likely be paying $200 around there, depending on which tax bracket you're in. If you're making under $10,000 a year, that means you're not making that much money. You could be a student, you could just be starting in like the workforce and stuff like that. Most likely you shouldn't even be investing if you're only making $10,000 a year. You should probably be looking for a better job, growing your skills, educating yourself in various ways to develop your skills so you can get a higher paying job. Those are going to be the most important thing for you. If you're making less than 10,000, 20,000, 30,000, 40,000 a year, what's going to be the best way for you guys to achieve financial freedom is to learn how to make more money, because you can only cut back so much until you're living bare bones minimum. That in itself is another video. Don't get too caught up on like how much you have to pay in taxes if you're not making that much money, because you're not going to be paying that much in taxes if you're not making that much money. It's plain and simple. If you're making more money, 100,000, 200,000, 300,000 every single year, you're going to have more expenses. You're going to be able to, when it comes to businesses, you're going to be able to write off a lot more stuff. So that's when it starts to get more serious, and the cost savings and all the tax advantage stuff from that's when it gets a lot more real. Let's recap this tax question, because I just want to get it into you guys' heads. If you are not making that much money from your day job, from your side hustles and all that, then the number one thing you should be worried about is making more money every single year. If you're making over 80 to 100,000 every single year, you can definitely afford an accountant. And anything in between that, it's going to be dependent on you if you have the skills to learn how to do your own taxes. or like how much time you have and all that stuff. So don't be too worried about taxes. Everybody has to pay them. Just pay it. So when it comes to taxes, there's really no secrets here. You just have to pay them. If you don't pay them, the IRS is going to come get you. So yeah, just pay them and hope for the best. Another question that I got a lot of from that last video was how to do technical analysis. So let's get the basics straight here. I'm using the Thinkorswim platform. It's completely free. Sign up for it with in the links in the description is where I leave all of the information for all of the frequently asked questions, and you can find everything there. And you'll be able to find it, install it on your computer, and start adding in all of the stocks from your portfolio onto there, and you guys will be able to see graphs that are a lot better than Robinhood. I don't want to make this too complicated here, so I'm just going to give you guys one strategy that I use to help me determine if I should buy a stock or sell a stock. So this is the stock chart for SPHD. Put up the ticker symbol here in the top left corner, SPHD. Change your time frame to 1 year, and then press OK, and then your graph should look very similar to mine here. Another thing you have to do is add in the RSI indicator, relative strength indicator. You can find that up here in the studies. Type in RSI, and it should be the top one here, and just click apply. Okay, so this is going to be a quick rundown of this strategy that I've been using for over the last year. The RSI indicator tracks all of the previous prices of the past few days, and it tracks the momentum of the stock going up and down, right? So whenever it gets over this 70 mark here, that means the stock is overbought. Whenever it goes under 30 here, that means the stock is oversold. So let's say if there's a major sell-off in the market, your stock SPHD is going to be oversold and is going to drop below 30 or around 30. And this is the time where I start to look at the price. This is the time where I start to look at it and see if this is a good time for me to buy. But basically, whenever it does go under 30, I would buy some shares, especially if it's SPHD, because let's take a look at the last year here. It only became oversold 1, 2, 3 times in the last year. So these are 3 different buying opportunities that you can buy. And if we look at the stock charts here, this one, when it dropped below 30, when the RSI dropped below 30 right here around Christmas time of last year, you can see that it went down to $36. This is where I would strongly consider buying the stock whenever it drops under 30 on the RSI chart. And when it goes above 70, yes, you guessed it right. That is where I look to maybe take some profits if I'm buying a lot of shares here, but typically I would just buy the dips. I don't try to do too much buying and selling here, but this could tell me that it might be a good time to sell because a lot of people are buying around this time. When it comes to stock price, you're never going to be able to predict where the price is going to go, but you can easily find some patterns and pattern recognition and stuff. That is what a lot of technical analysis is all about. I'm not a tax expert, I'm not a technical analysis expert, but these things are stuff that you can easily learn on your own, and hopefully you can take some of these strategies and apply them to whatever situation you're in, and hopefully that helps. If you guys want to see more from me, go check out these videos here, subscribe to the channel for more content just like this, leave a like, subscribe, hit the notification. I'll see you guys in the next one. I love you 3000. Bye bye.